Prakash, first, your thoughts on the Finance Minister's clarification on P&O taxability, and if that is something that the market was really waiting to hear, because that seems to be the case with the perk-up that we've seen.
Yeah, absolutely. I mean, this is one small relief in a big set of issues that possibly the ministry itself created. So I think it's created the problems. Now it's going around with the assuaging of all those ruffled up feathers. But I don't think, this is still going to let the whole issue go off in a hurry, Aisha. There's enough in terms of, clarity that the finance ministry needs to come through, particularly on the overall stand that the government is seemingly taking, which everybody, all FIs and all institutional investors have been kind of crying about. And it's fairly so that you really cannot have these draconian, retrospective kind of measures coming through and start behaving like a mature market that we deserve to. So it's a good step, but I hope that it's followed with some more concrete action as well beyond that.
Prakash, what about the overall market mood then? Because we've come off from a really bad series last month, and starting off this month you will have the Q4 earnings, which is perhaps going to be the worst of the lot up until now. You've got the credit policy as well. Lots to digest for the market.
That's true, Aisha, and characteristically what we're expecting is that the first half of the April series could possibly see some sort of short covering. We've already seen in the rollovers, if you really look at some of the high beta names are coming back, primarily because of the short covering that we've seen. They've been, rollovers have very clearly indicated that people are expecting some sort of a positive momentum for the first half, and possibly once the credit policy and the results start coming in, things could slightly taper off because IT is the first that's going to come off, and that may not be such a bad set, but we are more worried about cap goods, the infra space, which had run up quite a bit last time. So this time around the results could peter down all those expectations. But overall it's going to be a market that could give you a lot of trading opportunities, buy or dips, exit at another 100, 150 points of the Nifty, and you would have much more stock specific action this time around is what sense we're getting.
Prakash, Neeraj here, afternoon. Where are you finding those opportunities?
Primarily, we've seen that the seriousness with which defensives have started coming to the forefront in most portfolios. While we've not seen more ETF-led buying in the last few days, there's distinctly a vacillation towards defensives. And when I say defensives, for once, people are looking at enhancing the equity exposure to the likes of the FMCG pack, some of the pharma companies. So these are counters where genuine delivery-based buying is happening. We've seen a lot of short covering happen in those mid-cap pharma companies like Aurobindo, Orchid, and there's serious delivery-based buying also to back it up. So that's one pocket. Autos is the other, where there is some sort of a semblance of normalcy. There's really no panic out there. And then there's a couple of odd cement stocks like India Cement, Ultratech, where also there's some buying opportunity that's emerging. But as I said, it's very stock specific. It's not across the board. It's not sector specific yet. But yes, stock specific activity definitely seems to indicate the opportunity.
The other theme, Prakash, that's working out today is what's happening to some of the consumption names. The Jubilant Foodworks is up 6% in trade. The classic consumption stories, the FMCG names have been doing very well any which ways. What do you make of the moves today, particularly Jubilant Food?
Yeah, I mean, Jubilant had a little bit of a, uncertainty last series. We've seen a lot of short positions were, kind of continuing almost from the early part of March till right till the end. But, there's been a lot of short covering there. Secondly, Jubilant again could possibly come up with some sort of a guidance that could definitely be a market outperformer. I mean, making it a market outperformer, because the earnings for the last quarter would possibly be factored into the price at about 1050. But I think beyond that, if it has to move to the 1250, 1300 band, then there needs to be a spurt in the earnings profile, and that's exactly what's expected out of some of these consumption things like Jubilant, Bata, Titan, all of them.
Okay, Prakash, we leave it at that. Thanks so much for joining in today.